to minimize service outages like the ones that took place last year, DBS is rolling out measures to improve the resilience of its systems. Well, these include providing alternate ways for payments, shortening recovery times, and a channel for users to seek help during disruptions. These are part of an $80 million plan announced previously. Claudia Lim with more.
For thousands of DBS customers last year, simple transactions became an exercise in frustration. Some were unable to do any online banking for hours. To reduce such disruptions, the bank has been working on several things. It is separating key services such as mobile banking from PayLah so that when one is affected, the other still works. Also, quality control checks are being tightened.
By the end of March, I expect about 90% of the actions to be completed. So at this point in time, I'm quite confident that these actions will give us demonstrable outcomes and which customers will be able to see the benefits of these. However, having said, it's not good to end there. Our commitment is to continue to allocate and dedicate resources towards resilience efforts even after that into the future.
The bank has also hired senior staff to oversee tech risks and audit processes. Experts say this would help DBS stay on top of ever-evolving tech and safeguard critical infrastructure.
DBS is absolutely taking a lot of the right steps. What we find is very important in driving resiliency is really focusing on ensuring that things are as simple as possible, because when things are simpler, humans are less likely to make mistakes. Or even better, being able to pull the human out of the equation in terms of the operation and automating.
The move to strengthen tech resilience comes after DBS recorded 5 major digital disruptions last year. And since November, it's been imposed a 6-month pause by Singapore's central bank on non-essential IT changes to focus on shoring up digital banking systems. Mr. Gupta will see a 30% cut in his variable pay, while others in the management committee will have theirs collectively reduced by 21% from a year earlier. That's despite the record net profits of 10.3 billion Singapore dollars, up 26% from the year before.
On the whole, the overall economic environment is actually a little bit better than I had forecast 3 months ago. So on the back of that, we've given guidance that we should be able to sustain our underlying profits in the $10 billion range.
He adds that the bank's strengths will position them well in the coming year, even if geopolitical tensions continue and interest rates soften.
And for more analysis on how banks can strengthen their digital payment resilience, we're joined by Anton Rudden-Clow. He's a partner and head of financial services at KPMG in Singapore. Mr. Rudden-Clow, thanks very much for joining us. So we've heard a little bit about what DBS is trying to do. It's going to, be hiring more senior staff to oversee the tech risks of its business. We also heard about how it's decoupling mobile banking from mobile payment services. Could you give us a sense of how common these measures are, for banks, not just in Singapore, but worldwide as well?
Sure. I think DBS is not alone. Banks have the most modern software in the channel, so the applications that we see, QR codes, facial recognition, the ability to pay now, that is all very modern technology. And as you go further into the bank, into what they call product, so payments, capabilities, or into the actual core banking, the systems of record, the technology gets progressively older. So the trend in banking at the moment is to try and manage that kind of combination of very modern technology at the front end while trying to renew the technology in the middle, the products and the platforms. And that'll be a playbook that DBS is looking to run through. But every bank is suffering the same issues at the moment. Most of the core technology was built in the 80s and 90s. The product is probably 15 years old, which is quite old now in technology terms. So the challenge is really to upgrade that in a very rigorous, robust way.
Right. So, Mr. Rudden-Clow, what I hear you say is they're taking those necessary steps to manage the tech better. But are there other methods that are available for these banks to actually beef up their digital resilience? I mean, is it a one-size-fits-all method for safeguarding against these malicious attacks, or can they differentiate themselves in some way?
I personally believe if you're talking about scams and fraud, and bad things that happen to consumers, that's a complex sort of set of data science capabilities and cyber resilience that's required, and that's very smart people who can outthink the fraudsters. But when it comes to resilience of platforms, the banks are now learning to think much more end to end. So they talk around journeys that customers take, and they look at the channel, the technology at the front end on a mobile, for example, right through to the core, and they're reorganizing around that. So they manage the risks in these complex sort of webs of technology that sit behind the scenes that we as consumers never see. So that end-to-end focus is important. The second thing they're doing is creating governance and oversight to ensure they understand end-to-end those risks and how they run those risks and how they manage them for consumers on a daily basis. And the third thing is, as in your report with DBS, upgrading the skills and capabilities that sit within a bank. A lot of the technology is very specialised, so you want people who have a combination of specialist knowledge, but could also see the horizontal risks that are running through those end-to-end journeys. That's not an easy thing to do in this modern age. And so banks really have a challenge there to have that combination of deep specialist expertise and then broad governance running at the same time.
Yeah, you mentioned there that it's, the banks have their work cut out, and even if you look at the DBS timeline, these measures have been cooking for several months. And we heard the CEO also say that, they're only about 90% done. How challenging is it to build resilience in a bank's, IT systems?
Very. This is, you mentioned this. This is not an overnight task. In fact, it's not a 6-month or an 18-month task. We're talking about years of technology complexity that have built up in large banks for good reason, by the way. This is not a bad thing, and people have been doing this diligently. So this takes concerted effort over a period of time. I would say probably 5 years for most large banks, where they change their structure, their risk management processes, upgrade the technologies, bring the people and talent with them to be able to manage those. And at the same time, they need to actually change the core technology that sits in the centre of the bank. Very few organisations globally have committed to do that. So there's probably only 5 global banks that are doing the open heart surgery to replace that 1980s technology in the middle. So these things all need to work in concert, not a short-term fix, but there are a number of temporary measures that they're putting in place to make this work. So notably the talent one is probably the one that you'll see most often.
All right, thanks for those insights. We've been speaking there with Mr. Anton Rudden-Clough from KPMG in Singapore.